In the vast universe of trading strategies, some truly bright shiner than others. Today, we're unveiling one of our favorites, a strategy that's not only effective, but that's also very simple to grasp. We will dive deep into a reliable candlestick pattern that even beginners can master with ease. At the end of this video, you'll see two game-changing ways to capitalize on this strategy. If you find value in this video, please do us a favor and hit the like button. It helps others discover and benefit from our content. I believe that this strategy could significantly change your trading results. So let's get into it.
In a previous video, we delved into one of the 10 major candlestick signals, the shooting star. Remember, the shooting star is a bearish sign appearing at a rally's peak. It showcases a long wick and small body, signaling a potential reversal. Today, we'll uncover the shooting star's counterpart, a bullish signal that emerges after a market decline. This pattern culminates in a long tail and small body. Say hello to the bullish hammer. For this pattern, the tail should be at least twice the length of the body. While having all the conditions is great, the elongated tail is paramount. It illustrates the bear's weakening grip, with the bulls pushing the market back up during the trading window. Much like the shooting star, we pair the bullish hammer with other indicators for optimal entry confirmation. Here, we suggest pairing it with the stochastic oscillator for two main reasons. You are already well acquainted with it, and its reliability soars when combined with candlestick signals, especially considering overbought, oversold signs, divergences, percentage K and percentage D crossovers, and breaches of the 80 or 20 reference line. Now, here are some additional insights on the blue bullish hammer. An upper wick is acceptable, provided the tail remains long. A candle opening and closing at its high after the downturn, combined with an oversold stochastic, hints at a strong reversal. These moments offer such favorable odds to us that we might even boost our trading size. While the body's color isn't crucial, green is preferable, especially if the succeeding candle opens higher. The longer the tail, the likelier a reversal is on the horizon, and it might just be a very powerful one. Let's pull up a chart and see this pattern in action. Here is a current chart of the S&P Mini. This is a 6-hour chart, and you can see how prices have been declining for several days and until it culminated down here. Okay, where we saw the prices being rejected and leaving behind that long wick with a very tiny small body on top. Notice how the stochastic was crossing right at that point, indicating the validity of the signal, meaning that prices would be going up, and that is our expectation. Notice that candle closed at 43.8350 and prices actually reached all the way up to 44.40, which is quite a bit considering that this is a 6-hour chart. Now you may be wondering, well, could it be possible to use this in smaller time frames? And it really doesn't matter the time frame you use. The pattern is possible to use or is valid in all time frames. In this case, I'm going to show you a 1 minute time frame, And you can see here, same type of pattern. Prices have been making new lows and new lows and new lows until it culminates in this low here, being rejected by the market and then leaving behind a long wick with a very tiny body on top. Notice that in this case, the body is red. But as I said before, it doesn't really matter the color of the body. What matters is that it closes on the high and leaves behind this long wick. Notice that at the same time, the stochastic was crossing and producing a buy signal, and you can see that in 1 minute time frame it produced a very nice rally, going from the close here was at 44.07, going all the way up to 44.1725, meaning more than 10 points in 1 minute time frame. So, how can we leverage the bullish hammer? If we are positioned downward and spot a bullish hammer, it might be time to exit the position. If we are not positioned, we can buy as soon as all confirmations align. Now is your time to do homework. Again, try to spot bullish hammers on various time frame charts and validate those signals with a stochastic. Now simulate trades using the shooting star and the bullish hammer.
For consistent insights into technical analysis and trading strategies, please don't forget to subscribe. And if you subscribed, leave a comment saying I subscribed. Either I or a team member will make sure to respond. If you enjoyed today's content, here's another video that we've got lined up that you're bound to like. Check it out.